What's going on, YouTube Familia? Welcome back to another video. Today's video is confirmation checklist number 3, and we're going to be touching on imbalance, the one that everybody's been waiting for, also called IPA, which is insufficient price action. So I want to go ahead and show everyone, how to identify these areas of imbalance in the market, why these areas are created by the bigger institutions, and how you can go ahead and use it not only as an entry point, but a target point for when we're already in a trending market, right? So today's video is sponsored by, I'm just kidding, I don't got a sponsor, but what I would love for you guys to do is go ahead, pay it forward, do the right thing. Go ahead and share my channel, share this video with somebody that you think could use that extra little breakthrough in their trading journey, maybe just an extra confirmation in their trading journey, right? Because at the end of the day, this is still just very early on inside of this playlist for you guys. So let's go ahead and dive into it. I'm going to share my screen. We've had some really nice setups this week. And what we're really going to start out on is USD CAD. All right. Now, I already have this in replay mode, so you can't see what happened this week. But we understand from video 1 and video 2 that our market structure that we want to look for, right, are those equal highs, watch them sweep those highs, get money behind the move, and then we're going to catch that mark down. Vice versa, right? You want to see them create equal lows, sweep the lows, money move up, and then we're going to go ahead and catch that mark up. And we want to figure out whether we're in that uptrending market, that downtrending market, or that sideways moving market, right? So right now on a bigger time frame for USD CAD and understanding the influence of the dollar index, we were very bearish on the dollar index, right? We had great distribution up here, consolidation, markdown, and we're getting consolidation again. But overall, there's nothing telling us that this market wants to be bullish. So my daily and 4-hour bias on USD CAD is bearish, right? But I really want to tap into the, the trades that we could have taken advantage of this week. So I just needed to give you guys kind of that updated overall picture. But we're going to focus in here, right? And again, understanding the anatomy of the schematic, guys, the reason why they create these equal lows and then make the push down, think about it. That fast move up is going to create an imbalance of price, right? Because they move price up so quickly that there really was no time to get into any extra sell positions, right? So as you see, the definition of imbalance is pretty much a one-sided market where there's no wicks, and they have actually left open orders depending on which side that they took, right? So I'm going to go ahead and let a couple candles play out, and we're going to focus in on here. Oh, no. Let me go ahead. We're good. And we're going to focus in on this candle right here. All right, so what you guys want to see when we're looking at this, right, is no wicks on either side of the candles in the last wick before price action breaks down. So we got this candle, and then we got this hour that absolutely broke down. And then the next candle, we never had a deep retracement back into this body. So see how this body of this candle is kind of like open and nothing ever retraced. So this is what we call insufficient price action. This is what we call an imbalance of price, because it was a lot of selling pressure with no buying contracts on the hour time frame, right? So this is exactly what we want to look for, right? And especially since we're in a downtrending market, right? We're making high, low, lower high. We want to go ahead and see if we can make a lower low in this market and see if we could equal this out. So how we're able to really identify and take a trade off these imbalances, right, is number 1, understanding how deep they would be inside of a retracement. And number 2, you really want to be looking for the 50%, all right, of these imbalance areas. Why? Because that is the median of all the brokers that have created price, right? So we've marked up the 50%, which is about 34.05 now. Just to explain this a little bit more, if we had a wick, right, if this candle's wick had come all the way up here and touched this wick, this would no longer be an imbalance of price because we had that buy side retracement in the market, right? But since we didn't have that buy side retracement, what the market makers are going to want to do, what the institutions are going to want to do, is pull this market back up to reprice and rebalance, this area, right? So I'm going to go ahead and play out a couple candles, show you guys how exactly they do this. So what do we know that they like to do before ever hitting that point of interest. They like to create the little pool of liquidity, right? Small little pool of liquidity that got made right here. That is not what I wanted. Let me go ahead and get that back on here. Oh no. I totally just messed up my imbalance tool. That's okay. We'll leave it there, right? So this line, pretty much, I just want to do the template on this line instead. That's all good. Right, here's our liquidity area. Right, so they build up this liquidity right before the 50% of this imbalance. Now, again, all we got to do is wait for them to come and play into that imbalance area, play in that area that they sold off very fast on. And what can we do? Take a short position, maybe throw the stop loss right above that previous candle's high. And what are we going to target? Right, we want to go ahead and target that low, right? About 55 or so pips, right? A nice little 3-to-1 ratio here. So let me go ahead and play out a couple more candles, right? We actually go trade a little bit lower than here. So let's go ahead and pull this back down a little bit, right? We really want to see if we can equal out these lows. And watch what happens. What you want to see is them go ahead and do the same exact thing in these point of interest areas, in these imbalance areas. Just like this is distribution to the downside, you want to see them redistribute price in these high efficiency areas. So what do? One drive up into the 50%, and then that next candle shows that evidence of the market moving right back down, right? They redistributed inside of the imbalance. So you take your trade here, and now this is the next thing, right? You're in this sell position. What are we going to target? Not only the equal lows, but look at this price action to the upside. Study this price action. Where do you see an imbalance of price, right? I don't see an imbalance of price here because we had deep retracement wicks back into it. There's no imbalance of price here. There's no there's no bodies of the candles that haven't been retraced back into. But I do notice this one, right? We do have an imbalance laying right here. So let me go ahead and mark that up. And I'm going to show you guys how powerful it is that you could literally take this market from imbalance to imbalance. And I totally jacked up my imbalance tool here. That's all right. Colors are going to be a little off. That's all good. But look, now what market's going to do, and for anybody that likes, Fibonacci retracements, and this will be another video in this series, swing high, swing low. What is this? Your 70 to 79 retracement, right? Swing low to swing high. What is this? Your 70 to 79% retracement. So as this market goes ahead and trends down from our sell position, where do you see it reject off of? That other area of imbalance that was created to the upside. So you could literally play these markets back and forth just off of imbalance areas, understanding where you are long-term, and go ahead and just finding these imbalance areas with inside price, right? A nice 50 pip move here, a nice 30 to 40 pip move back up. And ultimately, you're going to see the market come equal out these lows. So we did go for those 75 pips, right? And now what's the market doing? It's retracing back in to these imbalance areas. So what would you want to be looking for next, right? This is our current imbalance area. So we would want for a deeper retracement back into here. As you can see, we have a down candle before an up move inside of this price action as well. So, and as you also can see, right, it's going to be a deep retracement, 70 to 79. So that's exactly what you want to be waiting for, right? Let me show you guys a couple other examples from this week. Let's go back to the daily on GU. Let me go ahead and get into another nice little replay mode, right? Bearish dollar, bullish GU. Also, we have a nice imbalance, right? Buy to sell, a lot of selling pressure right here. We never got any retracements back into this area, right? And they actually already have that 50% mark mapped up for me. And it's right here at the whole level of 3,000, right? So overall, we're bullish on GBP USD. So what do I want to be looking for? I want to be looking for any imbalances of price to the downside that I could go ahead and buy up, right? That's all it is. Now, it didn't give it to us here. All right. But I'm going to show you guys how you could have taken a trade just based on this, this setup Monday, Sunday night, Monday morning, right? Overall, we're shooting for this higher time frame. Let me go ahead and play out a couple candles. So this, dang it. Let me pull this back. All right. So check this out. Market opens up, trades higher. What if we left these imbalances of price? So I'm going to go and mark up the deepest imbalance that we have here. We're talking this body of the candle, this wick, and we have our 50% hanging out right there. So let me go ahead and mark it off about 28.07, right? So what can you guys do? Think about having an entry here, stop up underneath the low, right? If you were to take a fib, it's going to map out with that 61 to 79% retracement. And all you want to do is wait for that market to pull back into your deep area. And as I go ahead and show you guys the next couple candles, you're going to see what happened. The market came down, traded into the 50% to rebalance price because it moved up so fast. And literally for the rest of the week, the market went ahead and trended up into our overall daily time frame that we wanted the market to get to, right? And what happens when we get to that next key area? You're going to see the market start to reject, but we didn't see that money get back behind the move. So it's not the cleanest sell entries here. Very bearish on the dollar, very bullish on GBP USD. But again, traded back into the imbalance. Now, is it going to come back into the imbalance every single time? No, it doesn't have to. But at some point, this market will come trade back into 2,900, run these lows and play inside of this imbalance. So just understanding that you guys have these and see them. And right, this is only confirmation number 3, along with the higher time frame analysis. So there's a lot of other things that we'll be getting into over the next couple of weeks that you guys can go ahead and tag along with this as well. Last one I'm going to touch on is the S&P. So let's go ahead and go into replay mode because this was very, very clean as well this week, right? We're not going to talk about overall time frame bias, but what I do want you guys to understand is you just wait for those imbalances to be created. So what do we see here? Overall, market's in an uptrend. We're creating higher lows. We're creating higher highs. Higher lows, higher highs. So based on these lows right here, right, do you see an imbalance of price anywhere in these candles? We had some retracements, but there is still imbalance hanging out right here. Let me go ahead and extend that out, right? Extend that out, wick to wick. So right here at the price of about 32.13, right? We have the 50% of an imbalance. So again, guys, you're waiting for that deeper retracement, right? 61 to 70%. You have a minimal stop, right, of about 12 points. And all you got to do is wait for that market to pull back into there. If it doesn't pull back into there, then perfect. You just wait for that next time. We show that evidence of the market trading above old structure, right? So now you just want to wait for that retracement. What if we created here? A bunch of equal lows. I think we're going to get a couple more in here, right? Before we really touch this imbalance area. Let's play a couple candles. So we got close. We just created more equal lows. But then ultimately, what do? We trade right into the small imbalance that was left in price. And we get that what? Sell candle below liquidity to the buy move. So it's like a point of interest on a point of interest, right? We literally watch them reaccumulate inside of our imbalance area. So you could take a trade here, run the market up, right? Now this imbalance has been, right, invalidated. We've been able to go ahead and take our play off of that. And what the market's going to do is create another new imbalance of price right about here. So let me go ahead and play out a couple more candles, right? Market now, low, high, higher low, higher high, still breaking structures, right? So now what do we wait for? See if we can come get a deep retracement back into this imbalance. Now, initially, when we come trade into the imbalance, we see that rejection, right? And it went for about 17 points. So whether you may have broke even or whatnot, some people took a loss on this, but overall, they came to seek and destroy that imbalance that was right here, right? But what they really wanted to do is run this market just a little bit lower, because these were a little kind of equal right here, right? But again, there's going to be another play that I'm going to show you guys, right? It's crazy that it just keeps happening over and over again. So again, we make a low, a higher low, a higher high. What have we left? Two areas of imbalances. We have the higher area of an imbalance here that you don't always want to trade. You want to wait for those deeper areas, right? Now, again, none of this is clean imbalance, right? None of this is clean imbalance because we've had retracements back into it. You want to wait for this, right? So let me go ahead and show you guys. It just happened a couple hours ago. It was a little late in the session, but overall, what do you see? The market comes down, trades into the imbalance, which is going to be our deeper retracement area, 70%, and the market's going to run up, right? And again, I'm only showing you guys what it does on the hour, right? Back on UCAD. So right back on USD CAD, where we had initially shown our imbalance right here, right? And we were able to play this one off the 50%. Let's go ahead and look what they did right here, right? If I go down into a smaller time frame, you guys are going to see that they did the same schematic that you see on the higher time frames. What did they do? And I'm going to go ahead and delete this blue box. We had highs here. We had highs over here. They trade above the highs into that 50%. And then they show that the market wants to trade lower. We break this structure right here. We trade below it. So what does the market do? It comes back and retraces into that up candle. And then we go ahead and trade lower than all of those structures, right? Back into old areas of imbalance, right? So again, guys, you could play this pretty much both ways. Again, we are going to be imbalances pretty much one of the #1 things when I go to every time frame on any chart. This was just a quick overview video. So you guys can go ahead and start using this with your analysis. Video number 4, when we start touching on liquidity and you guys see me go ahead and point out those areas of liquidity and imbalance together, I think it's really going to bring it together. But again, guys, like, just go to your charts, right? And look for those areas that the market has left open. And if you wait for the market to come retrace back into these areas, again, like, that's all you got to do. It's the same thing over and over and over again. Entry at 72.07, stop loss at 72.27, 20 pip stop. So what? Run the lows. You know what I mean? Like, it just makes sense, right? And the markets are always going to do this, right? So yeah, I'm not going to really look at any other pairs. The market doesn't always have to come fill imbalance, but at some point it will, and it loves to do it because it's got a rebalance price. It just can't go up forever, and it just can't go down forever. So I appreciate you guys for tuning into this video. Go ahead, hit that like button, hit that subscribe button if you're not already, and I will see you guys next week for video number 4, when we touch on liquidity pools, equal highs, equal lows, and all the the fun patterns and recognitions that they have us learn as retail traders and how we're going to use it against them. So much love. Let's get it. Continue to live bullish, family, and let's run it up next week.